What's going on, everybody? Happy Friday. Happy Friday. What's going on? How's everybody doing out there? How's everybody doing? If you're just joining, make sure y'all hit that like button, subscribe to the channel. Click the link in the description for the Patreon if you want to learn how to trade. What's up, Ryan? Shout out to you. Shout out to you. How's everybody doing on this good old Friday, May the 16th, 2025? What's up, B Rush? Chilling. No doubt, no doubt. What's up, Gabrielle? Shout out to you. What's up? I'm not going to keep y'all long on this Friday. We're just going to do a quick market review, do some forecasting, and review what happened this week. Earlier in the week, we had a pump in the market, and then we pretty much retraced, and now we're just trading sideways, kind of. Give it a few more minutes to let a few more people come in the live stream. In the meantime, today we got XRP currently trading at $2.38, $2.38. What did we pump up to earlier this week? We went up to $2.65 earlier in the week, and now we're back down to $2.38. So I'm gonna review that here shortly. We got XLM at 29 cents. XLM was up at 30 cents earlier in the week. We got XDC currently trading at 7 cents. We got HBAR down to 19 cents. We got Bitcoin holding strong. Again, I'm still bullish on Bitcoin. Bitcoin going to break out. It's currently trading at 103,000. We got Ethereum, 2,500 for Ethereum. Algo, 22 cents, and Solana, $168. What's up, Pacific? Party time. Shout out, no doubt. So, like I said, I ain't gonna keep y'all too long today. Let me go ahead and let's look at XRP. Let's come over to XRP. And as you can see, I'm looking at my charts intraday. Let me bring you up on the big screen. So this is my chart intraday. So I'm on the 15-minute time frame. I've just been watching what price has been doing all week. Well, I'm in tune every day. So today, pretty much sideways consolidation. And I'm anticipating it to come back down lower to attack sell side liquidity below the market. But if we zoom out, you see this vertical trend line right here? Everything to the right of it was this week's price action. So every single day from Sunday all the way up to current day Friday, this week's price action. So let's review what happened earlier in the week. Everything to the left of this vertical trend line right here was last week. So the first thing I want to outline is the previous week's high. I want to outline the previous week's high right here. That was last week's buy side liquidity, which was the high of the week from last week. That's a key level. And on Sunday, so this was Sunday right here. Sunday, we opened up the week, kind of retracing, consolidating all Sunday evening. And then we crossed over 12 o'clock midnight on Monday. And what did we do? Out the gate, we expanded higher to attack the liquidity above the market. We punched through that liquidity and reached higher, creating this high right here. This was on Monday. So Monday created the high of the week. So why did we just randomly trade higher? Why did it just go up and on a dime stop? Let's go ahead and look back at what happened a few weeks ago. So what I want to do is I want to drop out to the 4-hour time frame. Let's go out to the 4-hour time frame. And if we look all the way to the left, it was about 7 to 8 weeks ago, these highs in the market right here. See this swing high? And then we got this high right here. These were highs from previous weeks. So all the way back in March. This week on Monday, price shot out the gate to attack the liquidity above the market that the market makers left behind in March. So let me go ahead and highlight that. Buy side liquidity right there. And if you think it's random, I don't know what to tell you. The markets are not random. They're algorithmic. They're coded. They repeat over and over again. So you see this high? This swing high right here was from March the 25th. March the 25th, 2025. That was on a Thursday. So months later, which was this previous Monday, do you think it's random how price goes directly to that level and then sell off the rest of the week? I don't think that's random, because these things, I see these things all the time. They repeat over and over again. So we trade up high. For you long-term investors, y'all might not understand a lot of these concepts. I'm a universal trader, so I see the market from a universal perspective. I see selling opportunities. I see buying opportunities, because the markets repeat over and over again. So that's why I'm a trader. So we go up, attack this high right here from March. Look how it trades up into that level, liquidates that high, and then the market quickly reverses and comes back down into a discount. That happened on Monday. So after that happened, we retraced down to a discount level, which is this highlighted, this black trend line right here. That's a discount level on the daily time frame. We trade down into that and we use it as support. And then we go higher on Tuesday. And then Tuesday pretty much stalls out. And then we opened up on Wednesday. And what do we do on Wednesday? We take out the highs from Tuesday. So let me highlight that for you. We take out the highs from Tuesday. So y'all tell me in the chat what y'all think the market is doing. I've mentioned it before. What kind of profile is this for this week in the market for XRP? What kind of profile is this? We go up, take out the high, and then we go back and return to this old high from March. And then we eventually sell off. We sell off, taking out the lows from Wednesday. And then we eventually come down and take out the lows from Tuesday and all the way back to Monday. And now we're currently trading. What's up, Lenny? Shout out to you. Shout out to everybody just joining. Yes, Gabrielle, we're ranging, but this is a seek and destroy profile. That means simply the market makers are pretty much seeking and destroying, taking out liquidity on both sides of the market. They're cleaning out the market. So you already know, with all the anticipation and all the hype going on leading up to, let's say Monday, futures go live, court settlement. So you see they playing games with that as well. Like it's all a charade. They got to keep stalling you out. So this is what the market makers are doing. They're shaking people out, especially people who are taking long position trades, not you investors, but for traders who are taking long positions, knowing the anticipation in the buildup. People are taking long positions and market makers are shaking them out. That's why you see this volatility. Look at the candles. You see the back and forth trading, the wicks. You see a lot of wicks and small candles. That is a high resistance market. That is a high resistance market, and they're pretty much liquidating both sides of the market. So we went up to a premium, back down to a discount, and now we're just ranging. So that was this week so far in the market. Let's go back out to the hourly. So compared to last week, again, everything to the right of this vertical trend line was this week in trading. Everything to the left of it was last week. Last week was a low resistance week. We trade down. What did we do? We trade down, took out this low. See the swing low? That was liquidity. They drop it down, scoop up orders, and then send it higher. So with that, people are chasing that, especially traders, people who think they can trade. People are going to try to chase that move. So, okay, going into this week, the anticipation is, well, I'm about to go long. So they did. They send it higher, and then They hit key levels found on higher time frames, and then the market pretty much consolidated, went back down into a discount. Make sure y'all smash that like button. I got 16 people in the building. Make sure y'all smash that like button for me. Share the video. Let me see right quick. Now let's go out to the higher time frame. Let's zoom out. I had to start. That's where I finished off at before, when I closed my charts. We're currently trading at 237. It is 7:21 Eastern Standard Time. So here at 8 o'clock p.m. that begins the Asia session. And I think they're not done. I want them. I want to see them come back down and take out liquidity and drop back down into these lower time frame. I mean, these higher time frame gaps in the market. But let's go get that higher time frame perspective. Let's go out to the monthly time frame. Let's go out to the monthly time frame. Let me clean this up right quick. And if y'all just joining, man, make sure y'all hit that like button for me. If you're brand new to the channel, subscribe. Hopefully this is being insightful for y'all. You know, a lot of anticipation. Some of y'all probably haven't even looked at the charts this week, you know? So let's go out to the 3-month time frame. This is the 3-month time frame. This 3-month candle represents the second quarter of 2025. So we're currently in the second quarter of 2025. We have 1 month and 15 days left to complete this candle right here. So again, why are we retracing, chopping around and this and that? Why, you know, why is this going on? Why did this week kind of fail? I don't pay attention to the news, if y'all don't know. I don't keep up with all that. People stressing out about the court case being over. It's over with. They got to keep playing with y'all and manipulating y'all. It's pretty much done and over with. But for people that got weak hands and a weak heart, and they got a lot of stress in their body, they can't take it. So that's where I come in to give y'all some comfort. But y'all tell me in the this is a 3-month time frame. Y'all tell me in the chat, what is this right here? What is this wick? What is that right there? And it might offer some type of insight on why we're bouncing around. What is this right here? Y'all tell me in the chat. What's up, Excalibur? Yes, it's a ghost pool. It is a ghost pool. So do I got it already pulled up? Let me see. Yes. So this is a ghost pool, and you can see that we're still ranging inside of this. We're caught inside of this. This wick high, that's a premium array. That's a premium level. Remember, I tell y'all, the markets go from a discount to a premium to discount. That's all it does. How do you determine what the discount or premium is? Wherever price is right now, whatever the current price is, anything below it is a discount. Any of these arrays that I show you, or these reference points, anything above it is a premium. So look at these levels that we're ranging in. So look at that high right there. Inside of this wick on a lower time frame, that was the previous day high. Look how we traded up into that right there, rejected. We come back down to this level right here, and now we're just ranging, and that's the manipulation. A lot of y'all aren't aware of the manipulation that goes on in the markets. These markets are highly rigged, highly manipulated. They're controlled, and you got to get used to it. That's what y'all signed up for. Y'all signed up for manipulation. So I want to see, how do we close in 1 month and 15 days? How do we close in 1 month and 15 days? Y'all tell me in the chat. How do y'all see this candle, which is the quarterly candle, second quarter of 2025? How do y'all see this candle closing? What's up, Ed? Shout out to you. How do y'all see this candle closing? Because we still got some time before it closes. 1 month and 15 days. 1 month and 15 days to close. So do y'all see, okay, let's watch this. Do y'all see this candle? Let me get a rectangle. Do y'all see this candle closing? Do y'all see it closing like right there where it is? Do you see it closing like at the 0.5 level? Or do y'all potentially see this candle doing this number right here? Y'all see that right there? This candle could potentially close just like this candle right here to the left. If it closes like that, that is very weak. And that's what I mean by this down here that I call 1 month in advance. This is a discount fair value gap. This is a discount BISI, buy side imbalance, sell side inefficiency on the 3-month time frame is a key level on the higher time frame. This is not out the picture. This is still in play. When does it become not in play? When does it not become a factor? Whenever price decides to move away from it and go on a run with consecutive candles. We're not there yet. So what is the market doing on lower time frames? It is seeking and destroying liquidity on lower time frames that you cannot see if you're zoomed out. You cannot see what's going on if you're too far zoomed out. So time frames, they are important because, okay, the blending time frames is very important. You got to know what's going on the higher time frames for directional bias, because the higher time frame influences price. Understand that. Also, you need to understand what's going on lower time frames, because there is a ton of liquidity resting in the market that you cannot see if you're too zoomed out. So the market makers are always going to seek liquidity because it's a trader's market. But if you're too far zoomed out, you might not see that. You might not know or be aware of where the liquidity is and how are they attacking it. Is the market on lower time frames in the discount? So look at this candle. If I was on the 3-month time frame, market still bullish. Nothing has changed for my directional bias. Nothing has changed for directional bias. You understand? Nothing has changed. I'm still bullish on the higher time frame. We went from a consolidation to an expansion market profile. We're currently in an expansion profile. It started back in the 4th quarter of 2024. October, November, December. Rolled over into January. We peaked out in January, taking out this high. And now we have been just ranging, and they left inefficiencies in the market at discount. We dropped down there. They offered a discount. So this candle right here, it swung from $1.61 all the way up to $2.65. This one candle. Look at the volatility that is going on with this candle. $1.61 down at discount, all the way up to a high of $2.65. And now we're just ranging inside of this candle. And we're also being held inside of a premium array, which is this ghost pool, which is this wick. We don't ignore wicks. Oh, what's up, Big Dre? Shout out to you. Said bullish close. That's a long time. Somewhere in the ghost pool. There is a ton below. So hopefully y'all understand what I'm trying to convey with y'all. A lot of y'all not going to get it, but that's okay. This takes time. So from the 3-month time frame, we know we got a month and 15 days left. That means this is the last month of the 2nd quarter. I hope y'all know that. Last month of the 2nd quarter. Well, sometime in June we'll end the 2nd quarter, and then we roll over June, July, August. So we're going to be rolling over to those summer months. So from the monthly, let's go down to, from the 3-month, let's go down to the monthly. And this is what the market looks like on the monthly time frame. So what we're doing is we're zooming down lower. The market is fractal. And so far this month, we took out the previous month's high, and then we're still ranging inside of this ghost pool on the 3-month time frame. Also, they got a monthly ghost pool right here. See this large candle? This large wick? That's a monthly ghost pool. It's a premium array. So if I take a Fibonacci, draw it from the opening price up to the high, you will start to see those levels blending. So again, look at that 0.5 level on this wick right here. We trade up into it, reject it. Now, that doesn't mean we're bearish. What they're doing is they're just on lower time frames, taking out liquidity on both sides of the market. That's why when I started this, I started down on a 15-minute time frame to show y'all what that looked like. So this is interesting because there's still liquidity resting below the market. There's still a ton of liquidity. So it would not be far-fetched for them to come on back down here to give it another opportunity. They can do that. But I'm going to stick to my bullishness. So this is the monthly candle for May. We have 15 days left to complete this candle right here. 15 trading days. So 15 days left. Where do y'all see this candle for the month of May? Where do y'all see this candle closing? Does it close how it is? Does it close higher? Or does it retrace and close bearish? What do y'all see? I'm leaning to the side that it closed bullish. Hopefully y'all understand. We're not panicking over here. Nothing has changed at all. We're not panicking. We're keeping our conviction. There's nothing to panic about. We're sticking to the higher time frame narrative and the higher time frame bias that we're bullish, and we're not going to veer from that. So from the monthly time frame, we got 15 trading days left. That's roughly 2 weeks. So before I drop down to the weekly time frame, let's look at the economic calendar, because we know there's roughly 4 to 5 weeks inside of every month. So if you never heard that before, this candle right here has 4 weekly candles embedded inside of it. And that takes a while to complete, right? A month. A month is quick, but it's, you know, sometimes this month has been very long. May feels like it's been about 4 weeks already. So we got 2 more weeks to complete this candle. And it already feel like it's been 4 weeks. So let's look at the economic calendar. So this is what we had this week so far. We had a high impact news week. So again, by there being a lot of high impact news this week, they offered a lot of volatility. And this is what I mean by volatility. When you see weeks with a lot of high impact news, expect market manipulation and volatility. And that's what you've seen this week in the market. Seek and destroy profile, because all of this high impact news that impacts the market. Hopefully y'all understand that. So let's go ahead and forecast into next week, which is the 18th to the 24th. So we already know Monday, CME futures go live. Let's go. I'm gonna look at that in a minute. But Monday, mark your calendars, May 19th, the CME futures go live. Matter of fact, let me come over here right quick. 1 second. So if you come to TradingView and you just simply type in XRP at the top of the list, and this is how you know they prioritize what they're going to prioritize. So at the top of the list, you see where it says XRP futures, and you scroll to the right, boom, CME, Chicago Mercantile Exchange, Globex, right there. So it's already on TradingView. Select that. Well, this is interesting. They went ahead and so I checked it yesterday. They didn't add the contract months. So here we are. They got the perpetual contracts, and then we're in the current month, XRP, current month, May, from the CME. So I'm gonna select that, and you can see it's not live yet. It's not live, no data. It goes live May the 19th. So the only downfall right now with that I have for the CME futures is it's only going to be listed on Robinhood, which Robinhood, I don't have Robinhood. I don't plan on using Robinhood unless they integrate with TradingView. I don't care for no other platform, charting platform other than TradingView. So I'm gonna need them to pretty much, well, it's coming though. It's not going to be just exclusive to Robinhood. I'm gonna need them to add it to TradeStation, AMP, Tradeovate, Iron Beam, any broker that offers futures trading. It doesn't matter, because I have accounts with pretty much all of these at the top of the list. Interactive Brokers, Ninja Trader. I'm gonna need them to go ahead and add XRP futures, and they eventually will. Or I'm gonna need Robinhood to go ahead and integrate with TradingView, because I don't care for a lot of these brokers and exchanges. Their charting platform isn't at the standard that TradingView has. That's why you see a lot. Look at Coinbase. They're integrated with TradingView, TradeStation, AMP, Tradeovate, Ironbeam, Oanda, Forex. All of these brokers right here are integrated with TradingView because TradingView is the top of the line charting platform. Look at Binance down here, you see? So essentially, when you sign up with one of these exchanges or brokers, You sign up, you KYC, you deposit your cash with these brokers. Then you don't have to return back to their platform. You can go ahead and come to TradingView and sign directly into your account without even having to go deal with your exchange or broker. And that is seamless. That is integration. So I had to cover that right quick. So the XRP futures for them CME is already listed on TradingView, but I'm gonna need them, and they haven't announced a lot of details neither. So they probably will go live on multiple brokers and exchanges. So we'll wait and see for that. But coming soon, I have determined that I will be doing a signal service. Y'all let me know in the chat if y'all interested in that. I will be doing a signal service for XRP futures. Also, I will be doing a signal service for the NASDAQ and the S&P. So if anything else y'all are interested in, y'all let me know in the chat. I will be doing a signal service. So that simply means I will be doing an analysis, and I will just pretty much be calling what I see. Now, there is risk, like anything. Not all trades will pan out, but I'm going to dedicate my time to analyzing the market, and this is day trading, and calling the markets day to day. So y'all let me know in the chat if y'all interested in a signal service. Let me pull up what we did in the NASDAQ today. So this is the NASDAQ today. I've been charting every day. I've been trading. If y'all be seeing my videos on my channel, I'm trading this market right here. This is what I'm trading, the NASDAQ futures contract. And I would like, if y'all are interested in this, y'all let me know. So I'm in here trading this every day. And once XRP futures go live, I will start integrating that into my list of assets that I trade. So I only trade like one or two, but I'm interested in the XRP futures. So you'll pretty much be getting the signals from me, and then you can pretty much take the trade, whatever, you know what I'm saying? Because a lot of people have a hard time, you know, a lot of people don't have time, or they have a hard time just breaking down the markets and analyzing. So a signal service will be, some people been asking me for a signal, and you know, people prefer me to do signals. So we shall see. And I got results on my channel. So if you can see how I view the market and how I call the market. Okay, shout out to y'all. Shout out to y'all. I will announce that eventually, but I got to work on it. I got to build it out. It will be in the Patreon, and I'm working it out. So back to XRP. Let's go down to the weekly time frame. Next week, we don't have a lot of economic news. May 19th, CME futures go live for XRP, and I believe who else? Solana, one of them. And then after that, Monday, Tuesday, Wednesday, no economic news in the market. So it could potentially be a quiet week, but you never know because a lot of things come out every day. So we shall see. I'm going to expect a cleaner week going into this week. And then Thursday, we got some high impact news, but not too much. So next week, we got a quiet week in the market. So I'm going to expect a cleaner week for price to do what it do. And then going into the final week, which was the fourth week of the year, the month, Monday. So you lower your expectations on holidays. Lower your expectations on holidays. So on the 26th, May 26th, I believe that is Memorial Day in the United States. That's a bank holiday. So don't expect much going into that. And then we got some volatility FOMC meetings. So we can expect a volatile week going into that week to close the month of May. Yeah, I wanted to talk. So next week could be very interesting. What are they dealing with Congress? Y'all let me know in the chat going into next week. What is Congress? Are they coming back to talk about the bills in Congress? That's next. Are they doing that next week? Y'all let me know in the chat. Next week can be interesting because you never know what's going to come out of left field. that can bring volatility to the market. So next week can be interesting. We know May 19th, the future CME goes live. That is very bullish. I don't know if they're going to delay it in price or is price going to react to it. So we shall see. I'm going to be watching it though. If y'all just joined, make sure y'all hit that like button, subscribe if you're brand new to the channel. So on the monthly time frame, let's drop down to the weekly. Oh, okay. Shout out to you, Excalibur. So next Monday. So yes. So they cleared the schedule next week. It's very quiet. If you're keeping up with this crypto market, most of the general public has no idea what's going on. And it's going to be a quiet week next week. Stablecoin bill, yes. So that alone could impact price action. That alone, because it's not listed. And if that passes, potential sparks for price. So I appreciate y'all for that. Shout out to y'all. So we got a stablecoin bill. So do y'all let me know in the chat. Do y'all think it get passed Monday? Because I don't keep up with every detail with it. I get the news around it, but do y'all think it will pass on Monday? Do y'all think it will pass on Monday? Y'all let me know in the chat. So we're on the weekly chart for XRP. B Rush, you say you think it'll pass? Okay. So if they pass that next week, Monday or whatever day, and they got the CME futures go live, y'all saying it should pass? Okay. So we get all that going on next week. That is very bullish sentiment for price. That is very bullish sentiment for price. So okay, we're on the weekly time frame. We know we got 2 weeks left in the month of May. So we got 2 more weekly candles to form to complete the month of May. We have 2 days left to complete this candle right here. So this candle right here closes on Sunday. Earlier this week, I believe on Sunday, I asked y'all, what side of the market do y'all see price coming down to? And I told y'all where I wanted to see price go to. Well, there goes my target up there, but we didn't get up there. But at minimum, I said, hey, I want to see previous week's high taken out. And then I showed y'all, just go back and watch the live stream from Sunday. I said, hey, I want to see this high taken out and then this high taken out. We got that. And then we got another high that was intraday. We took that out as well. And that was from like 7-8 weeks ago. So we took out all that liquidity that's hidden in the market. If you're too zoomed out, you did not see that liquidity in the market. So we traded up, taking out this high, that high. Now, look at this candle. Very volatile. Very volatile. It out the gate early in the week, shot up high. So early in the week, this candle was looking like this. This candle was looking like this early in the week. So I thought the momentum would stay strong. But I'm not surprised because the markets are manipulated. We took out liquidity and then they retraced it back down lower. That's exactly what that candle did. It went out the gate just like that. And then just like that. That's manipulation. And that is a high resistance market on lower time frames. So let's see where this candle closes here in 2 days. I still believe it can come down lower because we got some liquidity resting below the market on intraday. So they might want to come down and scoop up that liquidity on lower time frames. But let's see how this candle closes. Also, we can potentially, let me see right quick. I'm gonna throw up this weekly order block right there. So right here, I have a weekly order block and this market is high resistance. So all that back and forth and manipulation, expect that. So this candle right here, this is a weekly order block. And what I wanted to see was we trade down into it two times. And then we shot up higher. That was very bullish. Then we close this candle. So what I'm looking at now is this order block. This is actually called a propulsion block. So I'm gonna highlight it. And I want to pop in. Okay, this is a weekly time frame. This green highlighted area right here, that's on the daily time frame, on the lower time frame. Well, right now on the weekly, there is a propulsion block. It's like an order block, but it's a propulsion block. So the possibility that they can come back down and touch this is high. Also, this is a new one that I haven't told y'all about. You remember the ghost pools? Remember this ghost pool right here? I'm gonna highlight it from this candle open up to the high. Well, guess what? We can trade through them and come back down and use them as support. So ghost pools can be used as inversions. So every PD array I show y'all can be inverted. You just got to know what the higher time frame is doing. So do you think it's random that this candle right here, it opened up, traded down to the top of that ghost pool right there, and then boom, trades higher, takes out previous week's high, comes back down. And if we want to come back down into this ghost pool that's inversion, there are lower time frame PD arrays. So we got this daily fair value gap right here, and then we got this large one right here, and then at the bottom is this order block. I don't want to see us come back down this low, but markets are very manipulated right now. Well, XRP is very manipulated right now. That's for a reason, but I'm still bullish. And whenever the market is in a seek and destroy profile, all I like to do is scalp. It is very difficult. So what I do is, as a trader, I turn into a scalper, which means I'm not trying to hold on to positions too long. So I'm trying to be in and out the market. I'm not committed to any trades, none of that. I'm in and out, no reason to hold it because of the volatility in the risk currently in price. And I teach y'all in the Patreon how to identify the risk, high resistance, low resistance. I teach y'all that. I even talk about it live. So let's drop down to the daily. So we got 2 days left to complete this week. On the daily, you're going to see a bunch of volatility. So let's go down to the daily. So where did we open up at? We opened up on Sunday. So look where Sunday opened up at right here. This candle right here was Sunday. We opened up. We went down lower. What did we do? We took out Saturday's high. Right here. See this swing high? That was from Saturday, last Saturday. We opened up this week on Sunday, traded up, took out liquidity, and then trade back down lower. When we traded lower, we traded down to what? This fair value gap at discount. Y'all see that? So to me, okay, that was an opportunity. If I wanted to buy the market, that was an opportunity right there. We trade down the discount, completely fill the discount or the fair value gap. And then we close, and then the market out the gate on Tuesday or Monday, boom, wins high, goes higher. Just like that. When we went higher, we took out these old highs in the market. Let me hide this right quick. It's a lot going on. I know this is a lot going on. Y'all might be confused, but hey, this is the type of TA that I do. Y'all might think it's some bullshit, but it's definitely not bullshit. This is algorithmic price action. Drop down a discount, take out previous week's highs, left back in March. Look at the precision. If I take a trend line right here from this high, draw it all the way out to the right. Look at the precision. Do y'all think that's random? This swing high right there, all the way out to the right. Take out the liquidity, and then the market comes back down into discount. So that is a seek and destroy week. So if we just look at every individual candle, what it is doing is taking out, it's just chopping around, taking out liquidity. So this candle right here, Sunday, we open up, take it out Saturday's high, and then it drops down to discount. And then on Monday, we open up, trade higher, take out this high, this old high up here, and then we retrace and close. Tuesday, we have an inside range week. So it pump faked. So I was very bullish Tuesday. Because what did we do? Y'all see this down close candle right here? This is a order block. That is a order block. So I'm like, okay, look at Tuesday. We open up on Tuesday. We trade down to that order block. That is a buy entry if you wanted to be a day trader. We trade down into that order block, and then boom, trade higher. I'm thinking we about to head up out of here. That's why I was saying breakout on the way, because that's what price was indicating. And then eventually, here we are on Wednesday. We trade higher. We open up right here. Okay, I'm thinking on Wednesday we're about to break out. No, we take out the previous day's high from Tuesday, and then we come just short of taking out the high from Monday. Now, y'all tell me in the chat on the daily time frame, what is this right here? This wick. What is that right there? It's not random. What is that in the chat? How many times I got to show y'all this? What is that in the chat? It's a ghost pool. Shout out to you, Gabriel. It is a daily ghost pool. So look how we're trading inside of that. That's why, because this is a premium array, you don't ignore the wicks in price. When you see a wick, you better be aware, because it's like quicksand. It's like quicksand. You might walk into some mud or some sand looking substance, and then it sinks you. And that's exactly what price did. It went up, it ranged inside of this. Now, why did it react like that? Because we took out this liquidity back in March. Above that high was sell orders that the market makers left behind. We trade up into that. We range inside of the ghost pool, which is a premium ghost pool. And then what do? We break down. We break down. So on Thursday, that's when we got the large sell-off. A lot of y'all probably panicked. No, what did they do? They drop it down, take out previous day's low, sell side liquidity from Wednesday and Tuesday, and then close. And then look, here we are on Friday. We opened up, we trade up, trade down, take out the liquidity from Thursday and Monday. And now we're just ranging sideways. So that was a weekend, a seek and destroy week. We have discount PD arrays below the market. So look at this trend line right here. That's a weekly fair value gap. And then we got discount arrays, BISSIes, that's highlighted at discount. So we could potentially come back down lower, offer more discounted opportunities. If I zoom out on a daily time frame, let's get a 120-day perspective. So let me do this. Let me hide this. So what I did was I drew up this tool right here. This helps me look back in price to see where the liquidity is in market. So from right here to here, this is a 120-day window right there. Let me lighten it up for y'all. That's a 120-day window right there in price. So everything to the left of this vertical trend line was me looking back in price. So what I do is the past 60 trading days, I look back, find the lowest low and the highest high. What do? We drop down, take out this sell side liquidity right there. See that right there? Take out the sell side liquidity. We drop down, sweep it. Also, we drop down into what? Higher time frame discount. So that 3-month fair value gap. Right there. See that right there? Look at the confluence. Look how price blends together. So not only that low right there was liquidity, but we also dropped down into that 3-month fair value gap. So now I'm about to remove it. So I don't really need everything on my chart, but I'm using everything. So take out that liquidity, and then okay, we got the old highs that are resting above the market. So all these previous week's highs in the market. And then what we do now, after taking out liquidity, we no longer need it. So we find the lowest low right here. And then we just came off the highest high up here. So market profile, bullish, still bullish. We are in a buy program until further notice. We're in a buy program until further notice. So I mean, look what happened in the previous 20 trading days. So I'm gonna take a ruler, come back 20 trading days right here. $20 trading days right there. One second. I gotta take this phone call. All right, my bad. I had to take that phone call. But look, I'm looking back at the past 20 trading days. That's my range. So in the past 20 trading days, what do you need to do? You need to find the highest high and the lowest low. So I'm gonna show you where the highest high and the lowest low is. So in the past 20 trading days, there goes the lowest low right here, right there. And then you want to find the highest high, which we just came off the highest high this week. Let me remove that right there. We took out old liquidity right there. I'm gonna remove that. Now this is the highest high right here. So that's my dealing range. That's my range. As a day trader, that's my dealing range. So And that helps me know where in forecast where price most likely will go next. Now I take a Fibonacci. I'm going to draw it from the lowest low up to the highest high. Just like that. Some of y'all know in the Patreon what this is and what I'm referring to. That's my Dilling range. That's the lowest low and the highest high of the Dilling range. Anything below the 50% level, which is the midway point of the range, that is, let me remove this right quick. Let me remove this. Clean it up. So anything below the 50% level, that is a discounted market. Anything above it is a premium market. So this is not random. This is algorithmic. Sign up for the Patreon. The link is in the description if y'all want to learn this. So we can have an idea if the market is in a premium or a discount. So right now, the midway point is the equilibrium. That's the midway point, AKA fair value. So right now we're just hanging out slightly above the 50% level, but we keep tagging it. And that's fair value right there. Anything above it, premium. So we're still slightly at a premium. And then every time we drop below it, that's when we're in the discount. Now, if we want to be buyers of something, do we want to be a buyer in a discount or do we want to be a buyer at a premium? Now I'm trying to show y'all how to think like an institution. Do institutions want to buy at premiums or do they want to buy at discount markets? Y'all tell me in the chat. So if I wanted to be a buyer, I'm looking to buy at discount. So if we just split the range, look at all the PD arrays that's already highlighted below price at a discount. So 0.5 level discount, everything below it, look at the PD arrays, the potential levels that they can refer to. Right here. That is a discount fair value gap. And then we got one right here. And then we got the weekly order block right here. That weekly order block that I showed y'all. Go back and watch the live stream. So we're just ranging at equilibrium. We're ranging at equilibrium. In the market, what market profile are we currently in? So if we just take from this swing low right here up to the swing high, what market condition, what kind of profile is that? Is that a high resistance or low resistance profile on the daily time frame? Or is that high resistance or low resistance? You should know the difference if y'all been watching my channel. Is that high resistance or low resistance? What makes it high resistance, Gabriel? Shout out to y'all. What makes it high resistance? And by knowing that the market is high resistance, we can anticipate all of this volatility and choppiness. We know, okay, the market is high resistance, so we can anticipate that, okay, we can get some deep retracements. We can get some volatile price action. It's not random. I'm trying to tell y'all this. It's not random at all. There you go, Lenny. Choppy, a lot of choppiness, a lot of wicks in the market. What does low resistance look like? So let me come over here. Y'all want to see low resistance? Low resistance was back in the fourth quarter. This is when lower resistance, this is what a low resistance market look like. When it just runs cleanly, smoothly in one direction, either higher or lower. And there was there's more symmetry. There's more clean price action. So full body candles, clean, like the market is like retracing down to a PD array or a fair value gap, just like that right here. It trades down into a fair value gap and it doesn't take long. It smoothly makes it efficient and then smoothly moves away from it, just like that. And then we go into this consolidation. This was a several week consolidation back in December. And then we trade down into this fair value gap right here. But once we leave it, it made a smooth transition, low resistance, and then eventually took out the all-time high. So ever since we took out the all-time high right here in January, back in January, the market has been in a high resistance profile. Look at the choppiness. Look at the deep retracements. Look at the consolidation. Like, for example, these consecutive candles right here. I'm going to highlight it. Right there. Them consecutive candles right there. That is high resistance price action right there. Look at the wicks, just choppy, back and forth. The market wants to use these large wicks in price. For example, right there, we want to use that, those ghost pools. A lot of ghost pools form in high resistance markets. So Hopefully y'all understand the difference between low resistance and high resistance. I love low resistance is like cutting butter with a knife. It just cuts straight through price, and the patterns and the symmetry is real clean. But whenever they want to manipulate the market and frustrate y'all, they throw the market in this profile right here. This profile right here, which is a consolidation, just back and forth choppiness, a lot of wicks in the market. So after consolidation, what comes next? Y'all tell me in the chat. The markets do 4 things: consolidation, expansion, retracement, reversal. Consolidation, expansion, retracement, reversal. I showed y'all that before in the live streams. That's all price does right there. So we're currently in a consolidation on the daily. At the consolidation, depending on the higher time frame, we're anticipating an expansion next. Shout out to y'all, man. Y'all getting that deep insight today, man. So, okay, it just turned 8 o'clock. 8 o'clock. So the Friday candle just ended, and we just began Saturday. So it's Saturday in Asia. It's already Saturday in Asia. It is the Asia session just began over here in the United States. 8 o'clock Eastern Standard Time. 8 o'clock Eastern Standard Time. So we got 24 hours left to complete this candle right here. We just started it. Y'all literally just seen it print. So again, we're just still ranging inside of the range. We got liquidity from yesterday. Again, it's the end of the week. So I'm lowering my expectations. My expectations are low. So don't expect too much going on until next week. Next week, pretty much Sunday we'll come back. We're going to see what's going on, where we can forecast, because I want to see how that weekly candle closes. So y'all enjoy your weekend. Touch grass this weekend. But we can still analyze the market. Whenever the markets go 24/7, there's still day trading opportunities. So I'm gonna ask y'all, what's your bias for Saturday? Do y'all see Saturday coming down, taking out previous day's low, or coming up, taking out the previous day's high? Right now, short term, my bias is bearish. I am bearish because there's liquidity. And there's discounted inefficiencies in the market that they have not retested. So if I was a day trader, first of all, I'll be looking for scalping opportunities. I would not be trying to hold on to trades too long. I'll just be looking for scalping opportunities. My low expectation move would be previous day's low right there. And when I start my signal service, y'all, this is the type of trading. We're not going to be doing long-term swing trading, none of that. We're going to be in and out the market, giving y'all specific instructions. So what did we just recently do? We traded up. This is a 15-minute time frame. We're currently in the Asia session. We just traded up into this SIBI right here, sell side imbalance, buy side inefficiency. You can see how price trades up into that. Trade up into that real cleanly. And now we just began the Asia session, 8 o'clock p.m. And now let's just see if price wants to come down and attack that sell side liquidity that they left behind price from Friday right there. So that's my bias for today. That's the minimum risk. Y'all should already know. We already did the crunch the numbers for the XRP derivatives futures from the CME. We crunched those numbers the last live stream. Y'all do the math. My entry point right here. Take profit right there. Stop loss right here. You always got to have a stop loss. Look how I just jump in the market just like this. And this is what I'm going to be doing when the signals go live. Just jump into the market just like this, and you can see the volatility picking up at a specific time of the day. That's not random. Not random at all. So that's my target right there. That is... let me see right quick. That will be 437 ticks. Somebody in the chat. Somebody in the chat. I don't have it pulled up right now. That is 437 ticks down to take profit. What would be that if you was trading XRP derivatives? Let me pull that up from the CME. Let's go to the CME. I'm gonna type in XRP. Y'all do the quick math right quick. I forgot what it was. $5 is $5 per tick, $25 every 5 ticks. So there y'all go. So this is the CME XRP futures. It goes live Monday. That's the contract code right there. If we scroll down, minimum fluctuation in price right here. Every tick for XRP is $5, which is crazy. And then every 5 ticks, that's $25. So come back to the chart. Not that one. Right here. My bias is bearish. If I was to take a trade right now, down to this sell side liquidity, look, we have specific targets. So we're not just randomly, we're going to get in and out the market. That is a take profit of 437 ticks. Y'all are telling me that is $2,185. And that's the type of opportunities I will be offering or showing you in the signal service once I go live with it. Once this becomes more regulated and we have more exchanges for the futures contract for XRP. And imagine here it is, y'all just got off work, you had a long week, and you come to the market at a specific time of the day, which is the Asia session, and you see the opportunity, you frame it up, and then boom, you make a quick $2,185, which you didn't even make that at your job this week. Some of y'all didn't even make that at your job this week. So there it is. End of the week. There goes the opportunity right there. So let's see if that happens right there. I might keep this live stream going. I'm about to get up out of here, but let's review the rest of the price. We got XLM. I'm not going to give a deep dive. Tomorrow, I most likely will go live tomorrow and Sunday. So we will go further details going into next week. But this was a quick one this week. XLM trading at 29 cents. It's still ranging. We're trading similar to XRP. We trade up, take out the previous day's high or previous month's high, and we're ranging 29 cents. H-bar trading at 19 cents. We dropped down a discount last month. And now we're just holding inside of this inversion fair value gap right here. We're just holding inside of the inversion fair value gap. XDC trading back down to its fair value gap right here. Trading back down to this fair value gap. Currently trading at 7 cents. It's still looking like a great opportunity for XDC, but they could potentially drop it down lower, clean out all this liquidity, these old lows left behind in price. Do I want to see that? No, but it's a possibility. At the meantime, it's still trading inside of this monthly fair value gap right there. 7 cents. Bitcoin on its way to breaking this all-time high. Bitcoin, I'm still bullish. Don't be surprised next week or by the end of May, that price go ahead and break out. Look at this week so far. This is a weekly candle for Bitcoin, and it didn't do much at all. It was a dud this week. So this is an indecisive candle. It took out last week's high, and then what it pretty much did was hang out. So once this candle closes, look at this fair value gap that's potentially forming. This candle only has 2 days left. So here in 2 days, I'm going to anticipate that fair value gap right there forms, and then they can retrace it down to that fair value gap, offer another opportunity to get long for institutions that are trading, and then come clean out the all-time high, which is $109,000. So that's inbound. That's definitely inbound right there. And other than that, man, let me see right quick. Y'all click the link in the description if y'all want to sign up for the Patreon. Other than that, I ain't got too much to say. We're going to get back into it going into next week. Definitely going to be heavy coverage on the CME futures. Definitely going to be heavy coverage on the CME futures. Y'all come over here and sign up to the Patreon. I am coming out with signal services. I'm working on it, and I'm still working on the pro lessons. Again, life gets in the way. I got a son, I got family, and life gets in the way, but still work in progress. And I appreciate everybody that supported and taking value away from it. That's all I'm doing. Like it's a fair exchange for me. I'm actually putting in work. You're actually learning. It's a fair exchange. There's no gimmicks, no none of that. You're actually learning how I'm explaining it right here in the live stream. You just get more details. But definitely a signal service coming on the way. In the meantime, remember that 2300, that 2100. Let's see if that pans out during the Asia session. I'm gonna leave this running, and I'm gonna see if it goes down there. Once it goes down there, I will end the live stream. But I definitely appreciate y'all joining, and I'll catch y'all on the next one. Y'all peace out. Make sure y'all hit that like button for me. Subscribe. Peace.